Maybe off my keyboard. Thank you. Pablo! All right, we got to go to here. Pablo.
Yeah, I mean that's a fairly significant loss. You're right, Joe. It looked like they were going to walk Tevin Coleman off the field. Now they're bringing out the card.
Ouch.
And it being the wrist or arm, whatever it is that's affecting him, but he's in a great deal of pain, no question. Be right back after this from Progressive.
Right. Anything going there? All right. I can't ever get the thing, Pablo. I can't ever get to this thing correctly. Jeez Louise. All right, let's see where I'm at here. All right. Pop out. There we go. So we want it right there. Hey boy. Oh boy, oh boy, oh boy. Hold on just a second. Hold on just a second. I don't know why I can never get this correct. Nuts. You think after doing this 1,000 times, I'd be able to get it, and you'd be wrong. All right. Yeah, live right there. There we go. I think we're good now. All right, cool. There we go. All right. There we go. So you want to pop that guy out. Pop out chat. Good. Go over there. And then we go here. Hey, all right. Yeah, Snowy Rochester, right on. Scooby-Doo, Bill C in the house, Vinyl Earthling, K Paso, Mike C, Mark W, Denise, hello Denise, Brett, San Diego, Katrine, Pure White Michigan, right on. Hello Jill, 2 more weeks, preparing to thrive, right on. Oda, says Nathan, what's going on? Yeah, Packers better pull it together. Just they're down 10-0 when I clicked off, so that's not good. Titans, yeah, they just you can't run the ball. It's all. I mean, that's it's a beautiful Shenandoah Valley. Hold on a second, Mary. So, do you know anything about when the Senate might pass a salt tax? Has already passed the House. The salt tax relief. I hadn't heard anything about it, Mary. Are they, talk about increasing the amount of state and local tax deductions that you'd get up in the Northeast? I don't know. I hadn't heard anything about it. I'd be hesitant to think the Senate. I'm not sure what the other than maybe saving Susan Collins' seat. I don't know what benefit that'd be to the Senate, frankly. And I don't even know if that'd be enough. I'm not sure what benefit there would be to the Republicans to pass a salt tax reduction increase. I don't know. So I wouldn't hold my breath. I don't think there is no Republican senator other than Susan Collins in any of the Northeast states, California, Seattle, or California, Washington, or Oregon, Illinois. So all the highest property value states are all run by Democrats. So there's not one other than Susan Collins. What would be the last? Is there any other high property value? Virginia's Democrats, Maryland's Democrats. So I don't know what benefit would be for the Republicans to do that. I don't. And I mean, that sucks for you. It sucks for the Republicans to live in those states, but you're dwarfed by your big tax friends. The irony of it all, though, which would be funny to me, which is you can see the political change here that's happening right from our very eyes, which I love, actually. The irony of it all is if the Democrats were able to retake Senate in 2020 and Trumpster gets reelected, which I highly suspect he will, that'd be a good negotiating ploy for the Democrats. and Trump align, Trump would say, you want, I've been thinking about this. The Democrats led by Chuck Schumer are going to go to Trump and say, we need tax relief for our wealthier people in these states because the property values are so high. And Trump would say, you want tax relief, you're going to have to give me something for that. It's just the change, 180-degree change would be dramatic, actually, because it used to be the Republicans' tax cuts for the wealthy, and now it'd be the Democrats arguing for tax cuts for the wealthy. And Trump basically would be saying what I would think is either freaking Andrew Cuomo, and where he'd tell us Schumer and what's her name, Kristen up there in New York, to open up fracking, to allow poor middle-class people have access to cheap natural gas and under the Marcellus Shale. Or he would say, or give us some increases on other things that would the Democrats would normally be against, i.e. nuclear energy, restriction on legal immigration. I just, the whole thing would be funny to me. So I haven't heard about that, Mary, but if you have something on that, I'd be like to see. That'd be interesting to see in this 2020. The shifting landscape of the politics is just it's actually striking how fast it has happened for a long time. But I mean, for those of you guys who aren't interested in stuff, for a long time, the Democrats accused Republicans of being for the wealthy. If you looked, you knew that was not true. The Democrats always had a leg up on wealthy people. The Republicans were the upper middle class, but the truly wealthy were the Democrats for sure. But the poor and lower middle class were generally Democrats for sure. The middle class and a lot of self-employed entrepreneurs were Republican. But over the years, that has shifted where you still have the middle class and upper middle class entrepreneurs and whatnot as Republicans, but the wealth and Wall Street wealth is Democrat for sure. And the poor people who are on mostly the transfer payments are Democrats, but you see a shift. Actually, it's incredible to behold that the middle class is certainly well inclined towards the Republican Party, and then the elites are the Democrats, and the less well-to-do poor people are the Democrats too. It's very interesting to watch, and I could be happier for it because I think it's great for patriotism in the United States when you have a Democratic Party that's split at the between left and right. The left is so far in two different dichotomies: the far rich and the poor, and the Republicans, everybody else. You always want to be in the middle. So we shall see. So I'm excited for 2020. I think it'd be very interesting year for sure. Watch football, buy insurance. All right. Vic says, friend pension or lump sum question. 57 lump. Let me get my trusty calculator. Why do you talk politics? Because everything revolving around the tax code is political. I never understand people who say, I don't pay any attention to politics and gripe about taxes. I mean, the two things go hand in hand. A politician has to pass a law or vote for a law in which it to be taxed to. It's crazy. I've never understood this. You stop talking politics when it comes to taxes. They're completely intertwined. Well, you can't have one without the other. All right. So my man, Vic, 57K lump or 385 a month, single survivor, 62 years old. Okay. So 385 times 12 equals 4620 divided by 57,000. Ooh, that's an 8.1%. Let me just make sure I got that right. 385 times 12 equals 4620. That's 4620 a year, Vic. Divide that by 57,000. Yeah, that's an 8.1% pension. That's not debatable to me. I take the pension 2 seconds flat. If what you're telling me is right, that's a smoking deal. He's getting 8.1% payout on the pension. I would take that. Would even think twice. Richmond, right on, Brett, right on. North Phoenix is Kevin, right on, Kevin. Beardsley and 7th Street, where you found the Josh and Charlotte group. Beardsley and hey, it's a lot. Beardsley and 7th Street, which is now 101, which is nuts. If Bernie wins, should we shoot the moon and do Roth convert? Yeah, this is the question. I get this a lot, Mike C. And this is a lot of people push back on when I was talking about the guy, I can't remember his name off the top of my head. Dan, I think, anyway, who did $540,000 of Roth conversions. And rightly so. I think there's like my man Sergio had some valid points. Like, man, if you would have kind of, instead of doing 270 all at once, so he did 270 in Roth conversions in 2 consecutive years. And there's a lot of pushback. He should have done it a little bit more structured. No, I get at the end of the day, yes, I agree with that. But the water's under the bridge now. Now everything he get from now on is completely tax free. So it goes back into, if Bernie wins, should we shoot the moon and do Roth conversions of entire? I just don't think so, Mike. I wouldn't. I'm not. I mean, to be perfectly honest with you, in theory, if Bernie wins, we could have a higher tax bracket. Yes. I was listening to a YouTube video today, or it wasn't YouTube. It's Schiller, Robert Schiller, on Consuelo Mack, actually. They made I actually like Consuelo's Mack interviewing style. It kind of bores me. Some of the people she gets bores me, but I like them. But I like her. I'm a big fan of her program, Wealth Track, I think. And I think a lot of you have sent me stuff on that, which I enjoy immensely, those videos. I'm a YouTube addict, no other way around that. If YouTube was heroin, I would be living under a bridge with a syringe up my freaking vein, if that's how it works. Well, anyway, or in my toe or something like that. Isn't that what these guys do when their veins they put in? Anyway, but Schiller was talking about, I thought it was actually pretty interesting, because Schiller was talking about not Sanders or Elizabeth Warren. And Elizabeth Warren, you can't trust as far as you can throw her. But at least Sanders is a true believer. Not one of them are right now, as we sit here right now, are talking about nationalizing industries. And I thought Robert Schiller said it's interesting, because we have all these debates among millennials don't like capitalism, they love socialism. And everyone's like, oh my goodness, millennials, they're going to be like Hugo Chavez and, Fidel and whatnot. And we're not arguing the same terms. That's the issue here. Socialism, the way it was taught for many years, was the nationalization of industry. It literally was a nationalization of industry. And, from trucking to oil and gas to help banks and everything in between. I don't think, I've yet to hear anyone talk about nationalizing. The only thing I've heard is throwing fossil fuel executives like Hunter Biden in jail, according to Joe Biden. We're going to throw Bernie. We're going to throw fossil fuel executives in jail. So Hunter Biden will go to jail for that. But anyway, I haven't heard anyone talk about nationalization of anything at all. And I just, America's, so the idea that we're in favor of socialism, but no one's talking about nationalization, it's just weird to me. Now, would that happen under a Bernie presidency? Would he, find the strength to start talking that? Probably, absolutely. But he'll never get elected that way. And the idea that America will watch as an oil and gas ExxonMobil was nationalized, I don't buy into that. So why do I say it, Mike? Is because at the end of the day, do you really, really, really think Bernie is going to raise income taxes on people? I don't believe so. Bill Clinton cites 2 reasons why the Democrats lost the House for the first time in 40 years in 1994: assault weapons ban and raising the income tax. He cited those 2 things. Obama lost big time the House. In fact, Obama was the biggest. Not only was the biggest salesman for the gun industry, he lost more seats, the Democrats did, than literally in the history of mankind. It was nuts how many seats from basically dog catcher all the way up to Senate. It was nuts how many seats the Democrats lost. They're not going to do a massive tax increase. Now, they'll do some back end stuff, don't get me wrong, but they're not going to say your income taxes are going up. I'm telling you, what would happen is be a wealth tax. I literally think the Democrats have their way to do a wealth tax. And I am not necessarily 100% against that. I am not against that. I'm telling you, this is the left wing Josh coming out, but at the end of the day, we have some liabilities that have got to be funded, and they got to be funded by people who, in my opinion, by business, absolutely, by growing the economy. But there are, why should we be giving all this money to for-profit or nonprofit charities so they can pay freaking $850,000 salary to the guy at the United Way? It doesn't make sense to me. So, I would 100% say get rid of all tax deductions. Churches, charities, Ford Foundation, your progressive think tanks, all of them. We're all being taxed just like everybody. Get rid of all that stuff. I'd be 100% for that. But they're not going to tax income. They're not going to raise taxes on income to people making less than $200,000 a year. They're just not. Look, do I know what's going to happen in the future? No, but I'm not worried about that at all. Well, we shall see, though. All No, fear the turtle. Usually lump sum is not better. No, 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 no. No, this is wrong, 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 wrong. No, I'm not yelling at you, man. You have to look at it differently. You have to look at the percentage payout relative to the lump sum that you're going to get. If you're getting 8% percentage payout on a lump versus a lump sum, you'd be crazy not to take that. I'm sorry. The lump sum, you'd be crazy. You have to take the 8.1%. And the way you do that is you take the annual amount you're going to get, divide that by the lump sum you're going to get. And I'm just, if you're getting 8%, it's not debatable. Vero Beach, that's where my wife and I went and saw. Didn't we see the Dodgers play during spring training one time, a long time ago? Thanks, James. Are they still down there in Vero Beach? I don't think they are anymore either. It's funny. That's where my wife, she was sitting on the bed in the hotel. She saw this little, see that right there? That little circle. She goes, you're getting a bald spot. And she was doing it just to tick me off. I said, what? And I was all nervous. I was like 25 or something like that. I was like, what? I'm going bald. And she, I'm just joking you, man. There's this little circle back there. I was like, oh my goodness. Oh yeah. She knows how to, but with that said, how much do I love my wife? She brought me this hot tea for the live stream. It's good to be married, man. But it's good to be married to someone that you love and trust and is your best friend. And I tell you, why she chose me, I don't know. I would not have chosen me, but she did, and hopefully it's proven a good decision for her. All right, that's why insurance companies advertise on football games. Bad things might happen. Yep. Finally got cold in Indianapolis. Pittsburgh, there we go. My man Rob in the house. Pittsburgh. So let's get a quick score update, shall we? Hold on just a second, my friends. So someone said they're going for the Packers and Chiefs to be like the first Super Bowl. I thought ooh, yikes, that ain't happening, man. Looks like the Pack have hit the wall. Hey, Josh, you talk more about the 5% withdrawal spreadsheet. Yes. Oh, wait, hold on a second. All right, hold on a second. Okay, I missed my man Jack here. Thoughts on fixed index annuities. Our finance guy is talking to us about 5.5%. You want to go out? Hold on a second. There you go. Liam just put together a remote control car. Pablo can't tell if he hates it or if he loves it. And he just saw the car go by, so he wants to go check it out. Oh man, a 14-pound, probably 12-pound dog. How can he bring so much joy in your life? It's nuts. That tiny little rascal. And we just love him to death. It's insane. All right. Fixed index annuities. Our guy is talking to us about 5.5%. I don't get what the 5.5% Jack is. We need to learn more about that. We are 51 and 55, just retired last Thursday. Boom, boom, boom. Take that cubicle and crappy old job. I don't know if that's what Jack was working in, but take that. USA in your face. Pablo just brought his chew toy in. All right. I'm not a fan of fixed index annuities. I'm just not. Jack, I have yet to see the benefit. I'm telling you right now. I assume the 5.5%. Hold on a second. I assume that, just hurt myself. I assume the 5.5% would be the amount of income they guarantee probably 10 years from now. That's what I'm betting. So what will happen here is they're going to say, you put $100,000 in, we'll guarantee you, I don't know, it'll grow to $200,000 10 years from now, and not grow as walk away money, but grow as income money. Let me draw this out, because I think, and I don't know your exact. I'm using my T-shirt. Don't tell my better half to wipe this off. Let's go to these fixed index annuities. I'll tell you why I don't like them. Oh boy, I just made a mess of my T-shirt with that black dry erase marker. Oh no. The thing is, my T-shirts are old anyway. It doesn't matter. This is what I used. I can get them at Costco for $10, made by the slaves in China. I hope not. Actually, I shouldn't laugh. That pisses me off, to be honest with you, but be it as it may. All right. So here's how a lot of these kind of annuities will work. Oh man, this is important. You start with 100,000 bucks there. Oh, look at that. Nice. All right. So you start with 100,000 bucks. All right. They'll say in 10 years, there'll be $200,000 of which you can get 5.5% a year on. All right, so here's what's happening. Hope y'all can read it. So you start with 100,000 bucks. They say in 10 years will be $200,000, which would be your income base for which you can get 5.5% a year on. So that's 11,000 bucks. I don't want to use my white shirt again. I don't have any. I guess I am. Hold on just a second. I get nothing to. Okay, well, that's not good. There you go, t-shirt. All right, so anyway, you got so what happens here is in 10 years, you have a 200,000 income base guaranteed at 5.5%. This is what I'm assuming. I can almost guarantee this is what it's going to be, which means you'll be able to get what's that, $11,000 a year. So they're going to say in 10 years, when old Jack is, we'll say 65, you'll be able to get $11,000 a year guaranteed, 11,000 bucks a year guaranteed off a $200,000 income base with no risk to you except for the solvency of the insurance company. And I am not worried about the solvency of the insurance company. I'm just not. So that sounds pretty attractive because then you're sitting there saying, man, what they'll do, the sales guy will say, you're guaranteed to get $11,000 off of a $100,000 investment. That's what they're going to say. They're going to say you're guaranteed to get $11,000 a year off a $100,000 investment in 10 years, which is an 11% distribution yield, which sounds good. But that is good if that were truly how you should compare it, but it's not, because what's happening here is once you hit 65 or 10 years, I'm just saying you're 55, Jack, that $200,000 is your income base. That's not walk away money. That is just the amount that you can take for the rest of your life and is not adjusted for inflation. It's $11,000 a year that you're going to be able to get for the rest of your life, which is not, it could, what they'll argue is that you could get some increase in this if the markets go up. But the level of fees that are thrown on here and the lower returns they're going to get anyway, once you start pulling money out, there's no way this is going up. No way at all. So you're stuck at $200,000 as an income base. But how much is your cash value worth? Well, your cash value is going to be worth a whole lot less than that simply because of the way fixed index annuities work. They have participation rates. We'll say an 80% participation rate. I did a couple of videos on this 2 weeks ago, but I do a lot of videos, so I wouldn't expect you all to be there, but you should watch all the videos. Just joking. There's no way you could. Anyway, so you got participation rate. All right. So what that means is we'll have an 80% participation rate with, we'll just say, a 6% cap. All right. So a lot of index annuities will have something along these lines. All right, so an 80% participation rate. If the S&P 500 went up 10%, so the S&P 500 goes up 10% with an 80% participation rate, you get 8%. No, you don't get 8%. You get 6% because that's your cap. So when you have an 80% participation rate and the S&P 500 goes up 10%, you're like, yeah, I get 8%. No, you don't. You get 6% because that's your cap. Now, every single contract has a little bit of variance in that, but generally speaking, how it works. So where you could say, I'll have a 60% participation rate with an 8% cap. But either way, that doesn't include dividends either. So not only are you not getting the vast majority of the S&P 500, you're getting no dividends either. It's nuts. It just is impossible to make money on top of the fees that are thrown in. And the interesting thing about that is people say, well, you'll have a 6% or a 7% cap or something like that. People are like, I'll take that. But here's the problem, man. Here's the problem. The vast majority of times, the S&P 500 is either well above 10%, and we're talking the vast majority of times is well above 10 or well below, was it 10 between? So let me show you what I'm talking about. So you got 8% and 12%. So here's the S&P 500 has an average rate of return of, we'll just say 10% going back to 1926. Only 6% of the time to the S&P 500 was even between these in any given calendar year. Only 6% of the time. The average return is 10, and only 6% of the time was the S&P 500, even between 8 and 12. So if you're having a cap rate of 6, 7, or 8%, you know for a fact you're going to miss out the vast majority of the growth of the S&P 500. Like this past year, 30% gain in the S&P 500. The max you would have gotten, the terminology I just showed you, was 6%. 6, that's it. But Josh, you're not losing any money. Okay. Well, hell, if you don't want to lose money, just buy some CDs and let your other money go to work for you. I am not a fan of fixed index annuities. And on top of that, I hate the idea you have two buckets of money. One is your income benefit and one is your cash value. And those two things are completely different. Your cash value is always much, much lower than your income benefit. And so what happens is 10 years from now, you wake up, you're like, man, I put $100,000 in the S&P 500 fixed index annuity. My cash benefit is $200,000. My cash base, if you will, my cash or my income benefit, my income base, but my cash value benefit is only $130,000. I hardly made any money. That's not a good investment. You're like, okay, well, you've made $30,000 on a $100,000 investment. Well, hell, just last year alone, you made $30,000 on a $100,000 investment. So I'm just not a fan. What I would do instead is always going back to the two bucket approach. I'd put enough in CDs to cover me for 3 years of income, and I put the rest in what's called a naked account. No insurance products, nothing like that. And then 10 years from now, you can annuitize a portion, if not the entirety, of that naked account. Does that make sense? So let's just say you put $100,000 in, and instead of getting, we'll just say for simplicity, you got, we'll say $100,000 at 10% a year would give you, hold on just a second. So we got $100,000 present value, 10% a year, going back to the numbers we're just talking about, 10% interest rate, 120N, zero payment. That'd be worth $270,000 in 10 years if you got 10% a year. All right, I'm just using that for example. So what happens here is you're saying, okay, my $100,000 is worth $270 at that point, which means I can annuitize a portion of that, or I can do whatever I want. I can take my 5% a year. I can do whatever I want at that point. But that is my cash value and is the amount I could use to do an annuity, if that makes sense. I'm just not a fan of fixed index annuities at all. I think they're way, way oversold. In fact, it kind of takes me off. So I did, my man Sam asked about the fixed index annuities because he's a government employee and whatnot. And, one of the guys, I specialize in retirements for government employees, was talking about fixed index annuity, where he gets the lion's share of the market with no downside risk. And when you hear that, you're like, yeah, I like it. You don't get freaking the lion's share of the market. It ticks me off to even assume, to state that. So when I stated that in my video, I had a couple of annuity guys saying, oh, no, you get bond, you'll do better than bonds. I said, yeah, that's a hell of a lot different there, big guy, of saying the lion's share of the market. He didn't say you'll get you'll do better than bonds, which you probably will do, frankly. He said you'll get the lion's share of the market. He didn't say you're going to do better than the bonds. And that's what these fixed index annuities purveyors always say. They always say the sales solicitations that you'll get market-like returns with no downside risk, and it's just as completely fraud. Now, what they should say is that you'll probably beat bonds. I don't have any qualm with that. I think you probably will beat bonds because bonds aren't doing crap, but you're not going to get the lion's share of the stock market. So stay far away, man. 5% withdrawal spreadsheet. Yeah, I'm getting back on that, Larry. So, this is the simplest thing in the history of mankind. I mean, literally you say, okay, I'm taking 5% a year off my portfolio on any given, but I'll do, as we go into this week, I'll do more of my spreadsheets on that from, the follow from last year. So essentially what you're saying is here is like, I'm getting 5% a year on $100,000, that's $5,000. The market goes to $130,000. We'll just use that for an example. I'm taking 5% a year. That's 6,500. Now the market drops to 95,000. I'm taking 5% a year. That's 4,750. So you'll never run out of money if you do 5%. You don't adjust it with inflation. You just say 5% of whatever the market does. That's what I'm taking out. It's literally the simplest thing in the world. You'll never run out of money. In fact, if you're going to go that route, I would even argue you could take 6%. My spreadsheets even show you that 6% work pretty well too. The issue, who asked that, Larry, was 73 and 74 is so brutal. 73 and 74 were that whole time period from 66 to 82, high in inflation, high inflation, that did everybody in. It really did. And if you factor, and I hate to say if you do this because that, we don't know where we're going, but if you take away the high inflationary times, this basically the 70s, even during the Great Depression, you're doing just fine, taking well more than 4% a year out. It's just run the numbers. I've done it for you. And it's just that one time, those high inflation, low returns of the 70s, that just did everybody in. Because Nixon was such a freaking ass clown as a president, pardon my French. He really was bad. He was really bad, my friends. He really, really bad. No Republican in his right mind should say Nixon was a conservative president. No way. And hopefully he'll never go back that route where you have high inflation, and all that crazy price and wage controls and insanity. I don't even think we have to worry about now because we don't have any oil shocks or anything like that, because we literally now are producing our own fossil fuels. We don't have to rely on Saudi Arabia. We don't have to rely on Venezuela. We don't have to rely on Russia for natural gas. It's all right here in the good old US of A. And because of that, there won't be any oil shocks that'll make inflation go through the roof. There won't be any freaking raw Keynesians now from a president called Richard Nixon. There won't be wage and price controls. I mean, again, could Bernie get in there and start doing some of this stuff? Yeah, he probably could. But at the end of the day, what is it, buddy? Oh, thanks. You got a shoe toy? Oh, okay. Thank you. Gonna take him?
Yeah.
Okay, thanks, girl. At the end of the day, there won't be the same kind of oil. I mean, there could. Don't get me wrong. I'm not saying I don't know. I'm not I don't see the future, but I'm just not worried about it. I think there's much other things to worry about for sure, which is changing demographics of an older population, less growth, less inflation. That is the problem that we have. Medicare being hurt. There's not enough money for Medicare. Medicaid's dead to rights. And Social Security, I'm not worried about Social Security, but I am worried. But certainly Medicaid is done. And when I say done, it's going to have to get some serious money in there. And Medicare is the next one in line. They're going to have to fix those two. So, all right. Oops. Hold on a second. Just so I'm talking, don't forget. Hello, go cheese. Yeah, I got no problem with cheese, man. No problem with cheese. All right. Pablo's running around here. Apollo, he's doing what he wants to do. I wish we had 3 or 4 parties in House and Senate. Lon said, Pablo. Oh, man. Yeah, I don't know if I want that many structured that kind of shenanigans like what happened in Italy. I'm not a big fan of that. What's the best way to protect your retirement money when you're close to retirement? Wait, Marie, you're a Chiefs fan? I thought you're Pittsburgh. Way, yay. The best way to protect your retirement money when you're close to retirement. That's a two-pronged question, Pat. Because protecting it from the short decline of the market is one thing. Protecting it from missing out on the market is another thing too. So it's a two-pronged street. Yeah, I just think I don't know how, when you say you're close, I'm not sure how close you are, but I just think at the end of the day, you want enough money in certificates of deposit to make sure you don't have to take your money out for 3 years. If you can get away with 5 years, even better. I really believe, I'll say this to blue in the face, the barbell approach is just say, look, I got my stocks, I got my CDs. And it's literally this simple. Oops. And as long as don't need to tap into my stocks and the market inevitably goes down, I got my CDs that I can tap into to pay the bills. And generally speaking, the vast majority of time, if you can withstand 3 years or so, this will come back up to maybe not 100% where you were, but pretty doggone close. And if you can tap into CDs while you're waiting, that's the way to go. I'm not a big proponent, in fact, not a proponent of all, of moving everything to cash right the 2 years sequence of return risk and all that thing. I don't buy that. It's not that I don't buy into the sequence of return risk. I do, but my goodness, man, the sequence of return risk, which means you retire in the first 2 years, you get hammered Well, I mean, again, the way you deal with that is the barbell approach. So don't put everything into cash or CDs or, heaven forbid, corporate bonds. My goodness, don't do that. Just get some money in cash. And when I say cash, I'm saying that synonymously with CDs, and put the rest in stocks. And, when I say stocks, I'm talking ETFs, quality mutual funds, diversified. That's what you do. And that way you have enough cash to, to cushion the blow if the markets do take a fall, which they're gonna. I mean, if I've done this chart a million times a Sunday, JP Morgan has this every year. It shows the average peak to trough. Is that what it is? In the market's about 14% a year. So every year, essentially, the market's dropped 14%. Intra years. Now, we don't hear about that because we only look at the end of the calendar year. We're like, oh man, we haven't had a bear market really. We've had 2008, 2000, 2001, and 2. And that's on the S&P 500, and 2018. I think that's it. So for 20 years, we only had five down markets, not even bear markets. But we've had a lot of, 14, 10, 11% declines in the interim. People forget S&P 500 fell 7% in May. Was it May of last year or 2018? I can't remember. But in just 1 month, it fell 7.7%. 2018, I think it was. No, I can't remember. And don't forget, July 1st to August 15th, or July 15th to August 31st, 2011, the market fell 20% in like 6 weeks' time. Small caps got killed in May of 2015. International, I think, in July of 2015. So on any intra year, we get all kinds of ups and downs for sure. It's just people forget about that later. But while you're living through it, I guarantee you, people are freaking out. I remember getting calls on the July 2011 one where people are like, it's over, Obama. And by that point, I'd gotten over my initial despondence of Obama and the left being president, because at least I know that the Republicans controlled the House. I knew they wouldn't pass any socialistic programs with Republicans in the House. And I said, all right, if you're going to get out, it's your money. Do whatever you got to do. It's not my money. It's yours. But, if I don't know what this guy did, if he proceeded to get out of the market, I'll never forget us. Me and my man Rich were driving to West Point to do a seminar, coming back from someplace in Connecticut that we're doing a seminar. I can't remember where. Maybe we were coming back from Rochester. We did a road trip from Syracuse, Rochester. Did we go to Binghamton? Syracuse, Syracuse, Rochester, Albany. I think we came down. I think we started Binghamton. I can't remember. Anyway, we're going through a road trip of upstate New York, going down to, I think we went over to Connecticut, and then we came to West Point, going down to Manhattan, and then over to New Jersey. And I just remember we're on the road, whatever that road is that leads into Highland Park or Highland Falls or something like that. And this guy was a general. I used to do a lot of flag officers freaking out. The markets, I got to get out of that Obama. So your money, dude, get out. And I don't know. I just can't recall what he did. But I was in the car anyway, so I couldn't help him. I said, if you want to get out, you just got to call. Give him the 800 number to call. And if he did get out, he missed on some serious growth. That's a fact. So you don't want that to happen. Have you done a video on government health exchange? No, because when I tried to go on the government health exchange, Todd, 2 years ago, I literally wanted to jump off a bridge after slitting my wrist into a pool of starving great white sharks with a suit full of raw meat from a recently killed cow. It was painful. I was sitting there thinking, it's nuts. I don't have the patience for that crap. I can't, man. I'm sitting there thinking. And so we were on Cobra for 18 months after we left USAA, which is $2,100 a month. Thanks, Obama. And then we went, and then I looked at ACA, and I would have qualified for a significant premium, which to Obama's credit, he said, we're going to give you a premium discount if your income is low, because I wasn't making any money in 2018. And then, but I couldn't, I was like, I can't figure this out. So then at that point, did my wife go back to work then? Or I can't remember. But anyway, we just tossed, we were still on the Cobra for a while. And then finally, that's what it was. We wanted MediShare. That's what it was, a Christian-based, it's not health insurance. It's like a health sharing program, which worked out real well. At least, at least you felt you were covered. I still don't quite know. We didn't have any injuries or anything like that in which we had to test it, but it was nerve-wracking. because I really don't know what would be happen. I don't know. I don't know how we would have been covered. I don't know. And so ultimately, but it's cheap. I'll tell you that right now. And because it's so inexpensive, that made me believe that if something were to go wrong with a broken bone or something like that, that'd be costly. Um, but anyway, my wife, it was last year, and January of last year, a year ago, that she went and now is working for the CPA firm where she has benefits. So look, I got no qualm. I don't have any qualm with ACA. Don't care. I mean, you got to do what you got to do. I just don't know how to run it. I hear so many different stories from people. That sucks. It's great. It's just like private insurance. I don't know what to believe. I don't. And I have 4 kids, man. So I'm not ready to risk that for sure. I will tell you guys, I was talking to a lady on Friday. I was able to, one of my friends of my wife's, and I would say friends of the family. There's a lady who, Romanian, all right, and she was married to this guy for many years, trusts this guy implicitly, and the guy just is a scumbag. No other way around that. And let's just put it this way: the scumbag met a young lady and said, "Yeah, I'm out of here." You know what I'm saying? Friggin' pisses me off. And look, I'm sure women do that to men too. This is not a thing on men. It's just, I've seen it with doctors leaving their women for young ladies, and it pisses me off. Not gonna lie, it makes me mad. Anyway, so we're talking to this lady, and she's 61 years old, hardly can speak. She can speak enough English to communicate, but not well. And we're just talking over here, and it's I guess you call it pro bono or something. I don't know what you call it, but anyway. And she's in good health. I couldn't believe she's 61. I said, "Damn, you don't look like you're 61. Hell, man, you look like you're freaking 45." A very nice lady, hard busted. She's freaking Eastern European, man. These people, you're not gonna find harder workers than that. That's for sure. Bust her ass. Anyway, long story short was she was very, very worried about healthcare. And I said, how are you gonna figure this out, man? You got no husband. There's no one here that is going to be able to communicate on the ACA. She couldn't figure out Social Security to save her life, because we're talking about spousal benefits for ex-spouse and divorcees for if their husband dies because he's a little bit older and not in great health. And we're talking about that. She can't figure that stuff out. There's no way she can be able to figure ACA out. Anyway, and I don't know who can speak Romanian. I don't know how that works. And I'm just sitting there thinking, and her name was, whatever her name was. I remember, but I'm not going to say. I said, "Look, man, at the end of the day, we've survived multiple millennia without having health insurance for every single aspect of your life. The worst thing that happens is you go to you go get your mammogram and you got to pay cash for it. I mean, that's the worst thing that happens. That's not that big of a deal. All right, what if you get an emergency? Well, you go to the emergency room. All right, well, the hospital bills you. Well, you know what I say about the hospital? They can KMB. Because we know for a fact the hospital is all political. I'm telling you right now, they can KMB. Well, it means you got to go bankrupt. Okay, if that's the worst. Hell, sucks for the hospital that they have to write off the debt, that they don't have any way that they can justly argue in favor of how much they're charging you. They can kiss. I don't even want to say it. I don't care. I'm sitting there thinking, it sucks. Sucks. You got to go bankrupt, but you already own your home. You already own your car. You already have all this cash. What are they going to do? They're going to go after your IRA money? Oh, they can't. They're going to go after your home? Oh, they can't. You won't be able to get a mortgage? Who gives a crap? You already have your house. And that's under the non-likely event that she gets a big healthcare issue before Medicare. And this is the argument, by the way, that the left should make for healthcare stuff right here. And I think they try, but they throw all this crazy nonsense, socialistic stuff in there with the Green New Deal and all that, and white privilege that normal people don't want to hear this crap. They don't. But there's a valid argument to be made to say, look, if you can't get health insurance in the private market, you're going to pay a little bit more, but we're going to have it there for everybody, as long as it's something easy. And I'm never going to say single payer, because I hate single payer, because I know the politics behind it. But at the end of the day, there is a valid argument. So I said, I was telling this lady, is like, look, if you have to declare bankruptcy to get some stupid bill off your back, because there's no way they can justify those bills. No, we know for a fact. And I'll tell you the story. When I shared this before, how many people, hold on just a second, I want to see how many people I got on here to make sure I'm not talking to myself. Hey, 186, sweet. All right. So I shared with this before. We had Chloe was in the NICU at a hospital. There's another guy whose kid was in the NICU around the same time Chloe was. Another guy is very politically well connected. Chloe, my daughter, was not very politically well connected. All right. So the hospital well, I gotta get my pop-up back. Hold on a second. The hospital said, we're gonna give, of these two people, one is going to get written off on their bills for the NICU. The other is not. And who do you think got their bills written off and who did not? It was not old Josh and little Chloe who got our, thousands upon thousands upon thousands of dollars of bill written off. And by the way, we did have insurance. It was a politically connected guy. And he was through the Republican Party. I mean, he was connected to the Republican Party. And that just goes back to like looking at Michelle Obama. She got that squishy job at the hospital in Chicago for $350,000 a year, even though she had no experience. But her husband was Barack Obama, state senator, a rising state senator in Illinois. I mean, the hospitals are the biggest political beasts there are, for sure. And so the way I look at it, man, is if you have to go to the emergency room, and the likelihood of that happening is not high. If you get in a car crash, there is insurance through your, auto insurance and whatnot will kick in some money depending on various things. You have to look into that. But if that's what's keeping you from retiring, staying at your crappy old job that is literally killing you because of health insurance concerns, I don't know everybody's situation. I don't know. But if you're not smoking, you're not drinking, you're not freaking skydive naked from an aeroplane, all that stuff, and you're not driving a motorcycle without a helmet, you're not freaking shooting all that stuff, then by all means, man, just, be sensible. But, you got one life. Anyway, that's my diatribe on that. I just, so I don't know about that. And one of these days I probably will need to know more about it because, man, it'd be sweet if my beautiful didn't have to work for stupid health insurance, but she feels more comfortable doing it. And she's actually learned a lot on taxes in her job too. So there you go. All right. Let's see here. All right. They get the principal. Oops, I must have missed something. All right. Well, I missed something. So I missed, oh man. Okay. I'm not sure where, another Vero Beach. Vero Beach, you're the Kathy, you're the second Vero Beach person on the thing here. Right on. All right. We got Don from Montana. How do I feel about putting stop loss orders on stocks and ETFs? Love them, man. I love stop loss orders. So for those of you who aren't familiar, stop loss order says basically, look, I once it go and it looks, been a long. I got my Series 7 in 1998. It's been a long time. I haven't actually traded a stock since 2000. So just my old days when I was working at Schwab on the options trading desk and just trading for people. Stop loss order says, look, basically, there's no way I'm gonna be able to explain this off the top of my head. I have a $40 stock. It drops below. I can't remember what it is anymore, to be honest with you. I remember I love stop loss orders. I remember the one thing I did not like, who asked this, was John, you don't want to put a market order the night before. I remember that because I think it was Yahoo that a bunch of people at Schwab put open orders in after closing on, we'll say Monday, let's say 6 p.m. Eastern time. And then there's so much activity in international and other markets that by the time the market opened and their market order executed is significantly higher or lower than the open order they put in. Stop loss orders, though, I won't be able to explain it. I can't remember. I mean, I remember the premise. I just can't remember how to explain that to anybody. But I just remember I love stop loss orders. I think of that, that's the one benefit of hedge funds, frankly, is I was listening to that guy, Joe Greenblatt, which is weird too, because everyone's saying, I was watching Rose, something invest by Rose or something like that. For some reason, she's showing up on my feed everywhere. Rose, invest with Rose. She's talking about Greenblatt's magic formula, and she just basically said there are two principles there. I said that's not what Greenblatt's doing. I mean, he's buying up what he thinks are value large caps, and he's shorting high price short small caps. That's not, I don't know. That was just odd to me. I was like, that there's something going awry here with the magic formula versus what Greenblatt is actually doing. It was weird to me. And it seems like a lot of people think if you buy this, I don't know what you got to do to get the magic formula, but I just know at the end of the day, Greenblatt is shorting stocks that he thinks are highly valued or too high price, and then going long on cheap stocks, what he thinks. And that's, when I would never do that. And frankly, I just don't care that much. But at the end of the day, stop loss orders are a similar way to say, I'm going to lock in so I don't get killed. I tell you, man, if you can do that on a regular basis, I got no qualm with that at all. None. Kathy, it's not her first time here. She's been here many times. Absolutely. Do you feel okay? Is there a new 5-year rule when rolling? Oh, hey, somebody asked me here. I had an email today. Someone had asked me, and I guess I deleted it. He said, how about the 5-year rule from rolling right here. Mark W. This is exactly the question, some of the question this guy asked. Is there a new 5-year rule when rolling over Roth 401k to a Roth IRA? Now, Mark says at age 60. So I had forgotten the rules on this, on rolling over a Roth 401k to a Roth IRA. So I did my research and I looked at some CPA firms. And it's very interesting. I had forgotten all about this, which was a blast and pass for me because it made me remind me of why I initially thought my strategy, I'll share with you in just a second, was what I thought was valid. All right. So rolling over a Roth 401k to a Roth IRA starts a brand new 5-year rule if, so before everyone screams bloody murder, there's a caveat here. So if you had your Roth 401k open for 10 years, and you roll it to a Roth IRA, that 10 years you had your Roth 401k is null and void. No one cares. It doesn't eliminate the 5-year rule on the Roth IRA. However, if your Roth IRA has been open for 5 years, you are golden. Does that make sense? So Roth 401k, there is no 5-year rule from whatever you had with that Roth 401k. You roll it to a Roth IRA, it starts a new 5-year rule, except for the fact of whatever your Roth IRA in which you rolled it into was open. I hope that makes sense. So the moral of this story is everyone open a doggone Roth IRA ASAP. So if nothing else, if you have a Roth 401k at your employer, when you roll that sucker over to your Roth IRA, if your Roth IRA has been open for 5 years, you are free and clear without any penalties whatsoever, or taxes whatsoever. It's immediately a qualified distribution as long as you're over the age of 59 and a half. And I had forgotten about that, which was the whole premise of mine back in the day, the long time ago when they first came out with Roth IRAs. I said, okay, well, I'm going to roll over my 401k to my Roth IRA, assuming it's the same premise, that as long as my Roth IRA had been open for 5 years, my rollover from my 401k into my Roth IRA would also be satisfactory to avoid penalties and or taxes depending on my age. And the answer is that is unequivocally no, that's not true. So anyway, that was the answer that I was looking for. Some guy had asked, and I'll probably do a separate video on that because that's good to know. So open a Roth IRA, and I'll probably do a video tomorrow on that, just say why you need to open a Roth IRA now, without question. Hey, evening developer just quit his crappy old job as COJ. Now that is, man, COJ, that is fantastic. Love it. How can I put that on a t-shirt to sell and put it on a thing like my Starbucks cup here to sell to get rich? Gotta get rich. Excellent. COJ, I love it. Crappy old job. That's fantastic. And my man, evening developer, says his face is sore from smiling so much. That is awesome, man. That is awesome. Hey, big man. There he is. Everybody's asking for you. Look, there he is. Hey, my name is Pablo. I got some new chew toys. I love my new chew toys. You want to look at? I don't think Pablo sees very well, by the way. All right, here we go. All right. Yeah, right on, evening developer. That is freaking awesome. Mucho gracias to you, or congrats to you. I don't know how to say congratulations in Spanish. Todd said, or Fear says, Todd, thanks. I just signed up for ACA HSA, $0 premium with high deductible. Would have been $1,300 a month. The question is, who's in network though? That's the issue, Fear the Turtle. Who's in network? I don't know. That's the issue. My premium tax credit on 40,000 a year is $19.60 a month. My premium on the exchange is 15. I get the difference back. Yeah, right on, Kathy. I'm promoting Josh's videos on the annuities. They're pretty good. Thank you, sir. Thank you, Connecticut man. Pat, look around for see. Okay. Where are you seeing 3% rates, 3% CDs? Let's take a look. Is Navy Federal? Every now and again, you catch Navy Federal with a good CD rate, by the way. Navy Federal. My name is Pablo. I run the show. Let's see. All right, well, wait, hold on just a second. We're going to Navy Federal CDs, certificates. So look at your credit unions, my friends. Remember, credit unions are subsidized by the taxpayer. So you should get higher interest rates because they don't pay taxes on their income. Just keep that in mind. And that's not right when they're competing against community banks, but it is what it is. And so given that you as a taxpayer are subsidizing credit unions, you'd be crazy not to take advantage of it. I have, basically I use USA and Navy Federal Credit Union. I have Penn Fed Credit Union for my mortgage. So Navy Federal's got a 3% APY, a 37-month IRA certificate at Navy Federal Credit Union, my friends. Open a special 37-month IRA certificate and you'll earn 3% APY on your money. Plus, you'll be protecting your retirement funds from the up and down from the market. Start with just $50, and you can contribute automatically up to $150,000. That's not so bad, man. That's not so bad. That's a 37-month CD for 3%. I'd jump on that for sure. And that with CDs, you can take out. How much can you take out? You can take out interest. I can't. You have to look at the contract. Oh yeah. My Prairie Mark says his Filipino wife has bone soup ready. Logging off. Ooh, man, bone soup. I don't know. I'm doing some. So Todd said, what I'm doing is converting some of my tax deferred accounts to Roth and paying no tax out to my premium tax. There you go. I'm not, oh man, not getting a Super Bowl I rematch. Was that you was telling me that, Apollo? That was pretty cool. It would have been cool to see the Chiefs and the Pack. Ooh, yeah. Damn. I wonder if this is Aaron Rodgers last year. We shall see. Thoughts on staying in the market with stocks in retirement when one has a pension that pays all the normal bills? No bonds required here. Yeah, I see that. And again, it's at the end of the day, what are we trying to accomplish? I mean, forget the stocks and bonds. I mean, look, I like stocks because I do think they're the only thing that can keep up with inflation. It's not gold. It's certainly not bonds. But do you even need to keep up with inflation? You see what I'm saying? Especially if your income, your expenses start going down gradually, if not drastically. I just think I'm not one of these guys who say stocks are risky or less risky for the long run. I don't think that's valid at all. I think the long run never comes. It's like someday never comes by CCR. I mean, stocks are always risky because you're never at the long run. You're always at the short run. So there's always a bear market approaching. But at the end of the day, I just sit there. I think, I mean, if I don't need the growth, why mess with it? William Bernstein, once you've won the game, stop playing. I think that's 100% right. So I don't know, Ray. That's a good question. There's no good answer for that unless we can figure out what we're trying to accomplish. Yeah. So here's my man Tom. Tom, you did get the book, by the way, right on. Probably not your risk level, but I have 3 years of expenses working on 4 at a 2% money market and the rest in the S&P 500 index fund. We'll pull from the money market when the market goes down. That is so freaking awesome. I love it. Oh man, Pablo is literally a cat in a dog's body. Can you all see him? Look at that little nugget. Oops. Can you see how he's right there? I guess I'm not sure if you can see him right there. He's like in a circle like that. Oh, I just love that guy. Tom. Yeah. So think about it. He's working on his 4 years expenses in a money market and the rest in the S&P 500 index. Market goes up, pull it from the S&P. Market goes down, pull it from the money market. It's so simple. Is it as efficient as what all these, efficient market, Markowitz, what's the freaking modern portfolio theory and all that? Remember, Markowitz did not say market portfolio or modern portfolio theory was applicable to individuals. He didn't. He says applicable to pension funds. That was back in the 50s, by the way. So all this stuff about modern portfolio theory and all this other stuff, I'm like, yeah, let's just keep it simple. Keep it simple, stupid. I was surprised myself. I don't think anyone knew that the premium tax credit is refundable. Man, I didn't know that. Hey, West Virginia, right on. Do you have any advice, sequence of return risk for recent retirees? Is this an overpriced market? I would go back to exactly what Tom Major just said. Watch. Tom Major says he's 3 years of expenses working on a Ford and money market at 2%, and the rest in the S&P 500. That's your answer right there. I don't think this is an overpriced market. I'm sorry, I don't. I did a video earlier today where I said, don't worry so much. What did I say? I'm not worried about high PE ratios. I'm just not. And look, people can worry about what they want. That is not my concern. It's not. I don't think the market is overpriced at all. I just don't. And so because of that, I think we have more room to run. That doesn't mean we're not gonna have a recession. Doesn't mean we're not gonna have a bear market, because they happen all the time. It's funny, going back to efficient market hypothesis and all these other things, or just the rational investor, all these terms economics use to describe markets and whatnot. All right, where were you on Boeing in April? Not you, whoever asked this question, Watts. Where were you on Boeing in April? Where were you on Boeing in June? You see what I'm saying? Like, things happen that cannot be predicted. There's no way you could have seen that coming. But when things do happen, what do? Do you react after the fact? No one could see airplanes crashing. No one could see, what's that lady's name from the EpiPen later, Democrat Senator Joe, what's his name up in West Virginia, your neck of the woods, his daughter, who is the EpiPen scam lady, who is charging exorbitant fees for EpiPens, of which we have and we pay out the nose for. No one can see this stuff. I guess the lady from the blood, Thanos, or whatever her name was, Elizabeth Holmes from Thanos, you can't see that. But still, at the end of the day, until you see what's going on out there, where are you, on what side of the equation are you? You see what I'm saying? At some point, you just got to say the market is going to be the market, and it's going to grow across the board. Some stocks are going to go up and some are going to go south. Here, actually, I want to read this article, a little bit of it. I've been wanting to do this for a while. I forgot who sent this to me. It's the equal weighted index versus the S&P 500, which is cap weighted. And this is by Mark Holbert. I'm a big fan of Mark Holbert. Dateline December 2019. One weights companies by market value, which is the S&P 500 index. The other treats them equally. Now, the drawback with the S&P 500 versus the equal weighted is that the small caps are quite pricey. And I don't know what they are right now, but I mean, small caps, generally speaking, carry a high price to earnings ratio than large caps. So because of that, you are going to be buying a higher price market relative price to earnings ratios. But the problem with the market cap weighted is that, like Mark was saying, Apple, the stock of the largest market capitalization with the S&P 500, is a better bet than the stock with the smallest, TripAdvisor. But just how much better of a bet is it? With a market cap of over $1 trillion, Apple has more than 320 times the portfolio weighting of the S&P 500 than does TripAdvisor. Apple has over 320 times the weighting of the S&P 500 than does TripAdvisor. Is Apple really worth that much more, says my man Mark. And I've been a big fan of Mark Holbert for a long time. I did a video about a year and a half ago on an issue. I disagree with him immensely. I forgot what it was, but he wasn't being, clown. I just disagree with him. I forgot what it was. But anyway, many on Wall Street say no, that Apple is not worth 320 times TripAdvisor. After all, when picking stocks for your portfolio, you have an equal chance of picking TripAdvisor's Apple. Won't the S&P 500 index be improved if it gave equal weight to all 500 stocks? Their argument gained particular credence in the years immediately after following the 2008 financial crisis, when the equal-weighted version of the S&P 500 significantly outperformed the cap-weighted. In 6 to 8 years from 2009 through 2016, the equal-weighted version came out on top. Since 2016, however, the tables have turned. 2019 is shaping up as a third year in a row in which the cap-weighted version of the S&P 500 comes out ahead. At a minimum, therefore, this just goes to show that nothing comes out on top forever. But I would argue that cap-weighted version of the S&P 500 is the better bet for the long term. To understand why, it's helpful to step back and consider what we mean when we talk about the market. It is nothing more than the combined value of all shares. By definition, therefore, the market is capitalization weighted. A stock with a large market cap will have a greater weight than one with a small market cap. There are at least 3 reasons why the equal weighted version of the S&P 500 will lag the market over time. Questionable style and sector bets. When investing in the equal weighted version of the S&P 500, you're in fact making 2 specific style and sector bets. The recent winners will quickly turn to losers and vice versa. That's because the equal weighted version of the index is constantly selling portions of its biggest winners and buying additional share of its biggest losers, so that all holdings remaining at an equal weight. And this is where trended momentum hurts the equal weighted thing, because trended momentum show what was hot yesterday will be hot tomorrow is the idea. And there's some validity to that for sure. With equal weighted, you're selling your winners and buying your losers. I mean, that's literally what you're doing. It's like you're seesaw, you're going back like that. Call this an anti-momentum or contrarian bet, says Holbert. That small caps will outperform large caps. That's because the smallest cap stocks will have a greater weight in the equal weighted index than the cap weighted version. The historical data are clear that you should avoid the first of these 2 bets, according to data from French and Fama from the University of Chicago and Dartmouth. Momentum wins in a big way. A portfolio of stocks that have done the best over the trailing year far outperforms a portfolio containing the trailing year's worst performers. It's not even close. In fact, over the last 92 years, momentum beats contrarianism by an average of 7% of points, 7% a year. So basically what French Fama is saying, you want to go momentum. We'll see where Holbert goes with this. He's saying at the end of the day, momentum dominates contrarianism, basically rebalancing by a significant percent each year. Cap weight stocks are able to exploit this momentum effect because they don't sell portions of stocks that have done well. The data are more mixed when it comes to the second bet, though. On the one hand, over the same 92-year period, small caps outperform large caps by an annualized 2.3 percentage points. On the other hand, this average is not nearly big enough to overcome the hole created by betting against momentum. Furthermore, there is evidence that the small cap advantage has largely disappeared over the last 30 years, according to French Fama, and they run DFA, Dimensional Fund Advisors, they're the evidence-based investors. There has been no difference in the average performance of small and large cap stocks. But equal weight is riskier because the S&P 500 version of the S&P 500 is more heavily exposed to the small cap sector. It will be riskier than the cap weighted version. Let's see, I just want to keep going. Higher transaction costs because you're actually buying and selling more on the equal weighted, so it's going to cost you more. But let's see here. What else does he say? Okay, the bottom line. All right, okay. The bottom line, as we all know, the market is hard to beat, very hard. And when it comes to the S&P 500, the 500 stocks in the market is a cap weighted version. So anyway, sounds like Holbert actually said the market weighted is better than the equal weighted. There you go. I'm actually surprised by that because I do remember the 2009 to 2016 where the equal weighted dominated because small cap and value outperformed. That's interesting. I don't know how I feel about that. At the end of the day, just you're always gonna just buy the freaking index and be done with it. I tell myself that because it's like you're always gonna be like, man, I should have known, but you never will know. Anyway, so that's what my man Mark Holbert is saying. Of the 2 indexes, the equal weighted versus the market cap weighted, go the market cap weighted because the momentum is there. But man, 320 times Apple versus TripAdvisor. Just that's one example. That's a little bit nerve wracking. So when Apple gets hammered, the S&P 500 is going to get hammered a hell of a lot more than the equal weighted, which would tell me if you're trying to protect the downside risk, you'd probably want to go to the equal weighted more because it's not going to be as heavy into a couple of holdings. That's what it told me. So on the upside, yeah, S&P 500 does better. On the downside, the equal weighted is going to be much better just because it's not all tied up into a couple of shares. All right. Hey, Rick says, I hope I don't change one bit. You like my style. There's nothing else for me to change into, Rick. 49 years old, man. I am who I am. The Medicare fix may involve taxing retirees. So they're going to have to do something. Medicare is hurting. Everyone's talking about Social Security. I mean, hell, Medicaid is done. It's Medicare is a big, big elephant in the room. Yeah, there you go. Martin says, I'm taking 5% off the portfolio and keep it 3 years in cash. Man, love it. Love it. My future may be different. Oh, it usually is. Absolutely. Apollo 14 says he didn't win the lottery last night, so I guess he'll go to work tomorrow. My kids are off. You got it, Pat. There's a rough patch in 2013-14. Yeah. Dennis from Richmond. Is there a way on Right Capital to simulate the 3-year barbell approach? Yeah, you just throw, what I would do is I just throw 100, if you need 50,000 a year, put 150,000 in certificates of deposit or cash is what you do. You do cash, and then you put the rest in, like the S&P 500. That's literally how you do that for sure. Now, remember, when it comes to taking money out, all right, and this is where the Right Capital and any financial planning software, I wish they didn't do it as like this, but they're going to have you taken out from your taxable accounts first. In this case, is going to be your certificates. If it's in a taxable account, if it's an IRA, it won't matter. They're going to just pull it proportionally from the two. So if you want to simulate the barbell, you're going to have to actually manually put a distribution event coming from an account, a specific account. You're going to have to create an income. You go to retirement. No. You go to profile income, open up a box, or profile goals. Is it profile goals? I think it's profile goals. Open up a brand new box, and you say you want to have income as a distribution coming from such and such account of such and such amount for a couple of years. It's good. I wouldn't even mess with it, to be honest. It's going to be too complex. But you can, but look, Right Capital is very, very intuitive. Mess around with it. It's not going to hurt you, Dennis. I want to say it's fun. It's not, but you'll figure it out. There are ways to do it. It's just going to take some time for sure. Market will always go up. Look at history as our DNA to spend. Anytime you hear always or never, I have to initially say, I don't agree. Nothing always happens. Human beings are always going to be, a little bit unique for sure. All right, we got all right. Eric Works. He says, I'm retired. I can hardly put money into bonds anymore. CDs the best safe route for now. Yep, I think so, Eric. I wouldn't mess with bonds. I've done a million videos on bonds. I don't like them. Why take the risk? You're getting 2.2 on a 30-year treasury, and you're getting 2.94 AA rated 5-year, was a 10-year corporate bonds. Why? It doesn't make sense to me to take the risk on that. Just to keep it in certificates. Absolutely. When I was describing health exchange, that was funny. It says, Mary, you're not sure wasn't even really trying to tell jokes there, but okay. I appreciate you laughing, Mary. Not sure what was funny. What did I say that would have been funny? Pablo is my joke master. Liberty Health Share, right on, Apollo. Put some thoughts on how you like Liberty. We were on MetaShare. Liberty is the other one for sure. T-bills are just as good as CDs and no tax. Yeah. James, I've invested nearly 10 years in a large sum of money at Vanguard, variable annuity. Would you recommend an insurance rider when retiring with Transamerica within Vanguard? I don't know, James, what kind of insurance rider you're discussing. It's a bunch of, you got death benefit rider, death benefit, increasing death benefit, income insurance rider. You got long-term care riders, all kinds of different riders. So I just don't know. Why is Medicaid and Medicare in trouble? They don't have enough revenue coming in, brother. That's sister. That's all there is to it. And Medicaid is bad. Medicaid is hurting. Medicaid is this is where Obamacare screwed up right here, big time. And idiots like John Kasich knew this, but they knew they're kicking the puck or hitting the puck down the road or whatever. Republican governors should have known. But they sold their soul to the devil for rock and roll. And what they did is Obama said, we're going to give you a whole crap load of money to open up and expand Medicaid. All right. Now, what happens is 5 years from now, you will be on the hook to pay for that extra expansion. In the interim, though, we're just going to give you all this money as if the federal government they can write a check because you have all this money sitting in the Treasury. And John Kasich and other idiots who are Republicans who should have known better said, we don't want that money. But they didn't. They said, oh, we want that money because it can show that we reduced our deficit. It's all friggin' smoke and mirrors, all smoke and mirrors. So Kasich says, this is what Jesus would do. And friggin' disgusting human being, that guy. I cannot stand Kasich. Look, I'll take freaking Bernie Sanders any day of the week over Kasich. I'll tell you that right now. Anyway, so what happens here? Now, the Obamacare stuff, there's the federal government doesn't have any money. We knew a million miles away that once that sweet, sweet smell of free money was spent, which it certainly was on an increasing Medicaid, that the state government, I think, is responsible for like 3/4 of Medicaid. There ain't no money, man. There is no money. There's no money. States like Kentucky, states like Illinois, states like Massachusetts, Maryland. I was just reading about Massachusetts with a pension time bomb. And that was in the Boston Globe, the biggest lefties that are out there. And I'm sitting there thinking, these guys, they expanded Medicaid. They didn't have the money to pay for it as it was. And now with expansion, because they got this free money, now it's on them. There's no money for this stuff. That's just Medicaid. Medicare is, hey, Tom. We got the itch-o. All right. Should I keep sending extra to the mortgage? Currently max at 401k, putting in $2K a month into ETFs, 1K in savings, the rest goes to checking. I would, absolutely, man. I would absolutely send more money to the mortgage. Yeah, 100%, 100%. Man, just think how beautiful it would be to not have a mortgage. The sweet smell of not having a mortgage. I have a clogged up nose. I have no idea what that smell like because this house behind me has got a big fat mortgage. Painful, man, painful. But if you guys keep watching these videos, and you never know, I might be the next Graham Stephen, or what's his name, Graham? Yeah, Graham Stephen. He made $1 million on YouTube. And if your old buddy Josh makes $1 million on YouTube, which I never will, because I don't do what I'm supposed to do with the videos. I just do it, and I don't do all the kind of the stuff that goes into it. Let's see, where ought I go if I had $1 million on YouTube and we could do a live stream from my crappy old house in Peaks Island, Maine. That's what I do. I'd give the guy $500. Say, hey man, I'm Josh from YouTube. Can I sit on my old front porch? No. Can I sit on the back porch? I'll tell you, this is funny. My dad was putting in new stairs on the back porch. My first girlfriend, I finally got my first girlfriend who lived behind us. So in Peaks Island, basically there's no cars or anything. Back then there's no cars, no golf carts or anything like that. So we had our house, we had our garden, our compost up here where we kept our chickens here. And then you go through a little bit of a stream, and then you go through a little bit of woods. You go to my new girlfriend's house. I think it's 6th grade or 7th grade. I don't even know what it was like to have a girlfriend. Anyway, long story short, so my dad, it was nighttime. I was watching my kids. My mom was my dad still around? He must have been around because maybe it was 5th grade, 6th grade. I can't remember. But anyway, he must have been around because he had taken off the back porch and was putting a new back porch, so steps back there. And so I called this girl, or whatever. I can't remember. Did we even? Yeah. Anyway, I said, I'm coming over, whatever. She goes, okay. She was babysitting her kids. Maybe that's what it was. I can't remember. So I go out back, and I forgot there's no steps. And it's dark outside. It was night, and I fell. Oh, freaking killed myself. Anyway, so I get up, right? Why am I telling you this? Because I said if I ever get rich, I can go back to these people's house and sit on the back porch. That's what it was. So I get up, and lo and behold, do I know that I had stepped in a big freaking thing of doggy the dog, which I named when I was 2 years old, Dookie. So I go to the lady's house, the girl's house, who's babysitting her little sister. And we're sitting on the couch watching TV, and I'll never forget they had TV, a color TV. We didn't have cable back then, but I was like, man, it's like these were rich people to me. And all of a sudden you start smelling like, what the hell? I had tracked poop all over their carpet. No one had, literally you had to be rich to have carpet, wall-to-wall carpeting. No one had wall-to-wall carpeting. You had to be rich to have that. I had tracked doggy's poop all over her carpet. Oh. Anyway, so long story short, if I ever get $1 million on YouTube, I'm paying that guy who owns that house saying, can I sit on your back porch? Hopefully there's steps there. And I'll do a live stream, and I'll show you exactly where I was and what happened. And when I stepped in poop and tracked all over my first girlfriend's ever carpet. Now, remember too, her dad and my dad were not friends. So let's just put it that way. They were mortal enemies, and both were heavy let's just put it this way: they're doing stuff they should not have been doing, if you know what I'm saying. And both had tempers. My dad's a pretty big guy. This other guy wasn't very big, so I know my dad. He could roll him. But at the end of the day, there is some animosity between the two. And now old Josh goes over and tracks crap all over these people's carpet. Oh, there's old Josh. Yeah. Maybe I should do a video on if you ever walk out the back porch going to your girlfriend's house, make sure there's stairs, okay? Vinyl Earthling says that Roth rule doesn't make any sense. Look, you know the IRC, brother. I mean, look at Connecticut. Does it make any sense? Nope. If the Roth has been open for 5, but only 2, says Brian Dish, and you got 3 years left. It's literally based on how long it's been open for sure. Yeah, there you go. That's why you open a Roth now and keep that sucker open. Tom says, I opened my Roth 10 years ago, made 2 Roth conversions in 2019, 2020. Dustin, my man Dustin from California says a bunch of drunk politicians came up with these rules. No, I just think they give it. Look, man, drunk Ted Kennedy and drunk Joe Biden and drunk Bob Packwood, all these women abusers, they don't care. They just give it to their staff, and the staff does it all. And the staff doesn't, aloha from Maui, Pablo. Look, Mark, you're not going to say aloha to me, just old Pablo. Thanks, man. 9 years left if I send nothing, paying 2.875. Well, hell, if you're paying more than that, you keep sending $1,600 a month, my friend, you have that sucker paid off ASAP. Peter says, I opened my Roth IRA, second year is invented. I suppose my Roth 457 have that's my understanding, Peter. Absolutely. I can't give you tax advice, obviously, but going by the couple articles I read from CPA firms, I'd be very comfortable assuming that. And remember, who was it? Someone had posted on the other day, or sent me an email. My man Tom did about actually, there you go. Tom says, do your research and make sure you pay your estimated taxes as needed throughout the year. Try to make them even for all four. I mean, I could not agree more. Tom sent me an article or a note about a lady who forgot to take RMDs. She had forgotten to take RMDs for all these years. And that sucks, man. No other way around that. She'll get penalized heavy, but only if she gets audited. Always remember, I'm not saying shirk your responsibility as a taxpayer. I'm just saying, don't get all caught up and say, oh my goodness, look, if you don't get audited, it doesn't matter. So what I would always put yourself in a place not to get audited, like what Tom Major says here, pay your estimated taxes throughout the year. The IRS will, in my opinion, will get off your back as long as it looks like you made a fair attempt to do what they needed and paid them off for sure. If you're going over the top, like for instance, I think I can deduct $780 from this room right here for a business expense. And I'll probably do that, but I'm not writing every single thing off. I'm not writing that I took my kids to Hershey on a business expense. I'm not doing that, man. I'm not writing off, I don't know, hell, I'm not writing off hardly anything. I don't want the hassle of the IRS breathing down my neck if I can avoid it. It might cost an extra $1,000, $2,000 over the course of a year. I don't even know it will cost that much. That's worth it to me. I just don't want the hassle or the headache. So just, always pay more, but just remember, if you don't get audited, that's the better thing. Being audited is a friggin' pain in the ass, man. You don't want to be audited. If it takes you an extra $1,000 or $2,000 to avoid being audited, man, that is money well spent, in my opinion. I have a good friend of mine who's a CPA, and she got audited 3 years ago. It took a year and a half to get the IRS. And she made her nervous as all can be. Not that she did anything wrong, but she's like, what if I forgot something? You don't want to be audited. How to celebrate the Chiefs, right on. Mark, there you go. Margaret Schaefer, right on. Huh? You've been a Chiefs fan since we've been doing this. So good on you, Margaret. Congrats. It looks like the Chiefs are playing the Niners. It's interesting seeing the Niners stadium packed and actually loud when they couldn't freaking put half the people in there for, ever since they moved to San Jose. Do you ever worry about pensions defaulting and having to be backed by BBGC for 10 cents on the dollar? I don't worry about them being backed for 10 cents on the dollar. I just think the maximum amount they'll give you is like $3,500. So, I guess 10 cents on the dollar, if we're making, what's that, 36,000 a month in a pension, sure, but I'm not all that worried about those people. There's my man White Shoes. Calm down, White Shoes. Just look at my mutual fund holding. What exactly are cost basis methods and which would you select? Average cost, specific identification, first in, first out. Specific identification is always the way you can reduce paying taxes on the front end. That's a fact. Average cost is the least efficient, but the most easy. Specific identification saying I want to sell those shares and those shares only. First in, first out is just what it says. It's, what you put in first, you get out first. So specific identification is the way to go. Except how much of a pain in the butt will that be? That's the issue. I'm not sure if you do specific identification, do they revisit what your cost basis is the following year? I don't know. That would be the problem there. I thought the brokerage houses were required to withhold taxes. Hell no, man. Brokers aren't required to hold taxes. I'm not sure what you're talking about withhold taxes on, but no, brokerages leave it up to you. As well they should. They should leave it up to you. It's your money. They're just a custodian. They have no idea what your tax situation is. I got nailed a couple times for not making even payments by a history of 1099 income for a time. Yeah, right on. Looks like the pack preparing to thrive are preparing to dive. All right, looks like they're diving. Aaron Rodgers probably needs to stop doing State Farm commercials, for heaven's sake, man. Stop doing State Farm, start practicing, huh? I'm just joking. Aaron Rodgers is one of the best quarterbacks of all time. I'd love to see the market come in to buy more. That means you got a bunch of money sitting in cash. Means I hope you weren't missing out on the gains, the Trumpster gains. I can hear all the Obamas. Obama made it happen too. Credit. I'm not denying it. The market under Obama was quite good too. Market under Trump was quite good. You can't deny either. That's fact. Which goes to show you that's is the market subject to presidential whims? Maybe to some degree, but the market, the economy. The presidents don't do crap. It used to always drive me crazy. Reagan created 4 million. I said, Reagan didn't create a damn job. Clinton didn't create a job. Freaking individuals create jobs. The president of the United States doesn't create a job at all. Stop giving the president this power, even if it's the president that you like. Reagan didn't create jobs. Always has driven me crazy. All this, like, the president created all these jobs as if the power rests in D.C. And because the DC guy has so much power, he can just, with his pen and a cell phone, he can create all these jobs. No, he can't. It's nuts that. Get off this whole thing with DC being able to control everything. It can't. EpiPens, that's ABBV. I'm collecting Josh's money in my brokerage account. Right on. Yeah, that's all right. I mean, I don't know what the stock has done. I just know that Joe Manchin's daughter was corrupt as day is long, and she should never got that job. But political, they pull strings for the politicians, don't they? You talk about doing the Roth conversions and the time between retirement and start of Social Security, low income. According to Ed Slott, how long you plan on leaving it matters most. Yeah, John, I get all these people say, if I do Roth conversions, do I have access to my money because of 5-year rule? I'm like, look, if you need money, don't friggin' do the Roth conversions. The Roth conversions, whole point about the Roth is to get the money growing tax-free, not to take it out in 3 years. That doesn't make any sense. So let that money just sit there for sure. That's the whole point about doing the Roth conversions. Tech healthcare utilities will outperform in the coming years, in my opinion. I think tech has already done that. Josh doesn't like the dogs that doubt. I mean, I'm not against. I remember reading about it by the Gardner brothers back in '94, and I thought it was a cat's meow. And we've since learned otherwise. That it's just another strategy that works sometimes. It doesn't work sometimes, for sure. Healthcare is so complex that only 32 of 33 modernized countries have figured it out. Have they? Have they figured it out? NHS has figured it out. Canada has figured it out. Interesting. Not quite sure they figured it out. Not quite sure there aren't people with private insurance. Not quite sure the people who can come to America when they got the cash. Not quite sure there's not rationing. Okay. Let's see. Paolo's one of the dogs. The Tao, right? Oh, man. All right, hold on a second. I've watched 99% of all Josh's videos. Cookie for you, right on, CB. I've seen you on here, man. I've seen you on here. All right. Can someone convert 401k to Roth IRA during early retirement? And if so, what are the rules? Yeah, Rajiv. I'm not sure what you're asking. Can you convert Roth 401k to a Roth during early retirement? Sure. The rules are that every conversion you do has this 5-year waiting period before it is completely tax-free. Just keep that in mind. Just remember that. Yeah, every single conversion you do will have its own 5-year waiting period. So just keep that in mind. Yeah, right on. And Rajiv, I concur with the Vinyl Earth link. That's the best time to convert early in retirement. Could not agree more. What will be the effect of AI electric vehicles on the economy? I can't wait. I can't wait. It can be effective. We're going to have a whole lot of people living longer, and a lot of those brain power is being used to find good things for us, for sure. How many people die that the brain power that's not being exploited because they die on these freaking violent streets and car crashes? I can't wait, man. The truckers won't have a jobs. No, truckers are going to be able to use their brain power for other things too. I mean, I don't think over the road trucks are going to be taken over anytime soon, but certainly short haul will. Absolutely. I mean, I say certainly in 10 years. I mean, my goodness, the level of brain power that's being lost because of the deaths that we have on our roads is despicable for sure. So if AI can help with that, I am all for it. All for it. I cannot wait. I cannot wait to the day I don't even need to keep a car in the garage. I just freaking type in something, some freaking computer comes, some robot comes and drives me from point A to point B. It's going to free up significant amount of money. No car insurance. I mean, look, I'll tell you right now. I remember talking to a guy from State Farm, a pretty big wig at State Farm, watching a lacrosse game a number of years ago. And that was a big concern, State Farm, is artificial intelligence. And I worked for USA at the time, and USA made a little bit of talk about, but they didn't say, I mean, I wasn't among the big guys, but I remember State Farm said, we are worried because if people can rely on AI and they can rely on basically, cars that just show up when you need them, kind of like Donald's Pizza guy, you call the next thing, Donald's is there 20 minutes. Well, same thing with cars, these fleets of cars in a warehouse someplace scattered throughout your population center. What are we going to insure on? And he was scared. And it's interesting too, because you think about homeowners inspections, not homeowners inspections, but the insurance appraisers, insurance, the guys who come to your house and inspect the damage done. I was talking to a lady, she worked at USA a few years back, and she was like 60s, and she had to climb up icy ladders in houses, and I think it was Connecticut, from the Northeast to do not appraisals, assessments. I'm drawing a blank what the term is called. But anyway, and I was like, that's dangerous, man. That's dangerous. You shouldn't be doing that. And she goes, I know. And now they got the drones that are doing it. She goes, it's only a matter of time before they put me out of work. But to be honest with you, I'm 60, so I'm ready to be put out of work by that. So the drones can go up there. They can do the assessment without risking anybody's limb or life. All that stuff was great. So now she's going to be free to be able to do whatever she wants to do. Again, the argument goes in where you got Yang's UBI, and I'm not against UBI as long as you get all the other crap. And again, I think the argument can be made for some kind of universal health insurance. I do. I do not like single payer. I'm 100% against single payer, but I'm 100% in favor of vouchers. Everyone gets a voucher, and we'll make sure we have a place for pre-existing conditions. I think it's great. Everyone gets a voucher for health insurance. Everyone gets a UBI voucher. Do whatever the hell you want to do, man. Just imagine how much brain power would explode on the world from America. Oh, how many people are sitting in cubicles tomorrow are hating their effing jobs, their COJs, their crappy old jobs, and they're sitting there thinking, I'm not using my brain power efficiently, but I'm scared to leave because of health insurance, because I got this big fat mortgage. And we just say, look, we can't take care of the mortgages. I get that. But just think about, 20 to 30 years from now when I think there'd be such an explosion of intuition of just human capacity I just hope I'm around to see it, man. I cannot wait. I cannot wait. The ingenuity of a human mind is mind boggling. I sit there in awe about all those interactions going on up there in your brain, and to have some guy sitting at a cubicle like I used to do, just to get my boss. And my boss, I liked at USA, is my boss's boss or ass clowns, and have them just, well, you didn't do this. I was like, oh, I just want to shoot myself in the head. This is insane. And I have something more to offer. You have something more to offer. The guy who was retiring, I think he said tomorrow, he has something more to offer. We're wasting it. We're wasting it. Oh, yeah. All right. That's good. All right. They are not hiring new employees in Medicaid, trying to close the budget that way, than having district offices, one in each county. Not sure what you're saying, Bruce. They're not hiring new employees in the Medicaid offices. I'm not understanding that. Always take your shoes off at the door. That's right. Oh, man. All right. So, David, you pay estimated tax anytime you want. Yeah, you don't have to do it just at court. Yeah, I pay estimated taxes pretty much when I have enough cash to feel like I need to pay it. It's easy. Just log in, as easy as pie. The IRS loves you for doing it. And actually kind of cool to create an account. You can see your running tally of the IRS website, irs.gov, estimated taxes. It's easy as pie. I actually, I'm a big fan of paying estimated taxes that way. You don't have to do it at quarters. You don't have to do it. You don't have to do it anything fancy. You don't need anyone to do it. Just say, okay, IRS, I think I'm going to pay you $2,500 a quarter, whatever it is you want to pay. Click, done. I trust. I've done that probably. I did that probably 12 times last year. That's right, David. David, are you my Florida realtor? Are we going to get on a channel here or a thing so I can interview about the 5 reasons you want to move to such and such place in Florida? TurboTax prints out 4 coupons. CPAs fill out paperwork for compliance, not strategy. Cannot agree with that more. Absolutely. We had 3 intermarket bears in the last 10 years. Everyone forgets about those, so it's already priced in the markets 100%. Sorry, okay, James. Sorry to clear my Vanguard variable annuity. The insurance rider is a guaranteed income with 1.2% expense. I mean, James, you need the guarantee income? I don't know. I mean, I don't know. The variable annuity of Vanguard is going to be cheaper by far than most, but do you need it? Do you need that guaranteed income? And if you do, why not just do a SPIA and be done with the 1.2 expense? Are you familiar with SPIAs, single premium income annuities? SPIAs are like the easiest thing in the world. They're what you see is what you get. There's no additional charge, and you just know exactly what you're going to get. So I'm a big fan of SPIAs. TurboTax knows when you pay quarterly vinyl is when you go to file your TurboTax. It will say one of the last things it says, have you made estimated tax payments? I just literally just went through this 2 days ago. So I was wondering that myself. I was going, well, are they going to ask me how I paid? And I'll say, okay, I can't remember the exact terminology, but there's a button there that says, have you made estimated tax payments or something along those lines. It does jump out at you, but it takes towards the end of the system, which was kind of concerning me because I was asking the same thing. I was like, when are they going to know? Roth 401k converted to Roth IRA gives up the time it's existed towards the 5-year rule. So if you had your Roth 401k for any time, you don't want to add 5 years. Yeah. I'm 10 miles behind reading comments. Oops. Insurance people who evaluate damage are examiners. That's what it was, Denise. Exactly. That's what it was. Yep. Insurance people who evaluate damage are claims examiners. Yep. You got it. Is Roth 401k to Roth IRA considered a conversion or a transfer? It's a I guess a transfer. I think it's just semantics there. I don't know. I mean, it's a qualified plan to an IRA, so that's a conversion, but it's a transfer from a Roth to Roth. Yeah, I don't know. It's a great question. I'm not sure it matters. A rollover is what it'd be, not a conversion, not a transfer. It would be a rollover. A rollover conversion is definitely a rollover because you're rolling it from a qualified plan to an IRA. I don't know. Forward to realtor, right on, man. Well, email me, brother. Come on. Let's I aim to be like Josh when I'm older. He's my internet mentor. All right. Well, I don't know, man. Okay, right on. All right. What are you aiming to be like? Stepping on poop and going to your girlfriend's house and with her brand new, actually, I don't know, it was brand new. Just anytime they had wall-to-wall carpeting, I always figure it's brand new. All right, so a SPIA, Jane, that's right. No need to apologize, brother. A SPIA is a single premium income annuity or a single premium immediate annuity, SPIA. And what happens is with a SPIA, you're literally saying Vanguard or whatever, Transamerica, here's $100,000, and they're going to give you a certain amount of money for the rest of your life that you can't outlive. It's like a private pension. A lot of insurance guys, because I know people hate the term annuities, will argue, we're going to create a private pension for you. All that is an annuity. That's it. So what happens is you take $100,000, you tell Vanguard, I want to get a certain amount of money, and they'll say, okay, for James and his better half's wife or his better half's life, we're going to pay you $5,000 a year. So that'd be a 5% payout right now. All right, so you know for a fact that $100,000 will give you and your better half $5,000 for as long as one of you are alive. All right, does that make sense? The reason why that's better is because there is no rider, there's no cost, there's nothing. I mean, it's literally as simple as it's literally the simplest thing you can do. The drawback about these riders is that the expenses are significantly high to guarantee you what would ultimately be probably less than the income you could get from a SPIA, if that makes sense. Because if let's just say you're 62 and a SPIA is going to give you 5% payout. I'm just saying that for example. The older you get, the more the SPIA that will pay out. So a 72-year-old guy and a 62-year-old guy, the 72-year-old guy will have a higher payout rate simply because he's that much closer to death. The income rider on the variable annuities are contingent on a bunch of different things, one being the fees. And the fees are going to hurt returns. And so because the returns are being hurt, there's less upside for the market to grow. So what I recommend for people who need a guaranteed income, let's just say you got $500,000. I'm just using that for an example. We'll say a SPIA 250 and you put 250 in the market. All right. So what happens is this right here is 250 for a SPIA. We're going to say it's going to pay you, for just simplicity, 5% a year. I literally have no idea. 250, it depends on how old you are. So that will pay you $12,500 a year. All right. So you're like, yeah, that's pretty good. And now the rest of this money can grow naked. We'll just say that grows at, again, we're going to say 10% a year. Well, let's just say 7% a year. So in 10 years, that's worth $500,000. All right. So now this 250 is done. You don't have access to it anymore. It's gone. As long as you and or your wife are alive, or your husband, however you're married, this right here is $12,500 a year for 20 years, for 30 years, however you're alive. Won't change. All right. But now you say, okay, now this 250 has grown to 250. I'm going to SPIA another 250 over here. So I'm taking half off this account where it grew to 250. But now instead of getting 5%, because I'm 10 years older, I'm getting 6%. And 6% on 250, is $15,000. See how this works? So basically what you're doing is you're allowing the market to grow naked. Naked means there is no insurance holding you back, no fees. And because of the growth of the market and because of your age getting older, more closer to death, you'll have a higher payout rate and you have more money for which you can SPIA than the variable annuity will have. Look, I can't guarantee a doggone thing, but this is the way it's going to work because the annuity always has the expense that it cannot overcome. That 1.2, you just can't overcome that expense relative to a naked account. So what you're doing, you're saying, look, I'm essentially creating my own variable or income annuity without having to have the fees on it as well. And don't forget that the issue with the insurance company, the reason they throw those 1.2% fees is because they're worried that they're going to be ones holding the wet bag. And so they're like, no, we don't want to hold the wet bag. So we're going to charge you so we don't have to hold the wet bag. You're like, it's just not beneficial to you. It's not. So create your own income annuity if you need it. If you need the income. Well, if you don't need the income, then don't even bother. So what they'll do is they'll say, look, man, in this case, we'll guarantee you 5.5% a year, 10 years now for the rest of your life. Okay. Well, that's on today. It's just not going to beat the scenario. I mean, again, could it ever? Sure. Most likely, it's not going to beat the scenario. Not even close. What I just explained to you. I hope that makes sense, man. There's a lot going on there. I guess tough for me to give you a good answer in 5 minutes, but I'm just telling you, SPIA with a naked account is much preferable to a variable annuity with the expenses thrown on there. Just it really is, even though it's done through Vanguard. Just really is. My man, Mr. Whittam says, related to Chief Wiggum, Chief Wiggum, Mr. Whittam. You get it? Wiggum. I want to be self-employed internet entrepreneur in the financial planning space. I learned more about real world advice in my CFP class. Yeah, right on. Well, look, man, I've been in this business a long time, brother, and I've learned more from clients than I did from a CFP class. That's for sure. And just my own reading, and talking to people. I can't tell you people I've learned from just who email me on this or even just these little things. I learned freaking a ton from you guys. It's nuts. And that's one thing that bothers me about some of these guys on the YouTubes is that, they act like, I hate, this sounds like disparaging. It's okay not to know. There's no way anyone can know all the answers. It's okay not to know. Like, I don't know what, someone asked you something tonight. I don't know. I mean, there's a lot of things I don't know. But I also there are some things I do know, and I know the tax code is not your friend as you get older. I know that for a fact. Now, there are various methods on how to deal with that. But first, we got to establish the fact that, are we in agreement? The old way of doing business where you defer, like every single freaking, I don't want to say an Army term, let's just say Sierra Delta told you to do for the longest time was to defer. Now, that's the wrong answer, man. I know that factual. Is that the wrong answer for everybody? No, but I know that if we could get you to do Roth conversions while my man Rajiv is paying low income on the front end, that's a freaking win. That's a win. It's a win for him, not for the IRS. Hate to say it, screw the IRS, man. IRS is just doing what they're paid to do, which is gather up tax money. I get it. That doesn't mean you have to volunteer by your own ignorance to pay more. But, some of the stuff just takes time. You got to learn. You got to be in the business. You got to talk to people. You got to ask questions. A lot of people in my business talk. They don't ask, and they got to talk. And obviously, if you're doing this in a monologue, you're going to be yapping. But asking questions is critical. Getting to know people. What's their background? What have they seen? I was talking to a couple of people the other day, and I don't want to go any further than that. Anyway, it's nobody's business. All right, a Roth 401k to a Roth IRA rollover assumes the rollover the 5-year rule. So if you have a Roth 401k, you want to convert in the future, open up a Roth IRA now. 100%. Yep. The funds, not dunks. Laugh aloud. I don't need the income for sure. The IRS loves you. Yeah? Well, we do too, Final Earthlink, because Medicare, Medicaid, and Social Security need you. They need you to pay. And by the way, you all should love me because I have 4 kids. We're keeping Social Security solvent. Talked to a guy yesterday whose kids on my kid's basketball team. He has 7 kids. First thing I say is, thanks for taking care of Social Security, brother. So remember, instead of being they got too many fit people, population, we're too many people. Like Bill Burr says, we got too many people. And like the Chinese literally force women to sterilization and abortion. You should say, thank you. Thank you for keeping Social Security sustainable. How does the interest portion of the payback have to do with gentle interest rates of the market? If you think interest rates are going up and you can wait a bit, you're better. Yeah. So what happens, John, is with a SPIA is based on your life expectancy and the current interest rates without question. So one of those two things inherently is going to get more beneficial to you. Your life expectancy is going to drop, which means you're going to get paid more. I would be hesitant to be too confident the interest rates going up. I'm telling you, man, it's to my chagrin. All these many years later, USA, we had 3 annuities, fixed annuities, not fixed index annuities, just old-fashioned fixed annuities. There's a 2, a 5, and a 10. The 2 was paying 4.8, the 5 was paying 5.5, and the 10 was paying 6. And I remember telling people, man, just buy the 2. There's no way that interest rates aren't going to go up because of the amount of government spending, because of Obama and Bush. No way. And I remember my man Rich, who I told you at the beginning of this episode that we used to do seminars together. We used to get in these fun debates about deflation versus inflation. And he was right. I was wrong. I was wrong. And he said, look, you got to look at Japan. That's the model. And I said, nah, dude. Milton Friedman said inflation everywhere and everywhere is a monetary problem. Spending too much money and all that. And just simply not the case. Anyway, long story short, if you would have bought a 4.82%, a 2-year CD or CD fixed annuity, and 2 years that came up and you try to re-roll that in, there was no such thing as a 6% 10-year one anymore. Those are down like 4. The 5-year were down like 2.5. I remember I had a couple guys in there. I remember they had over $1 million on those 10-year fixed annuity. That's 6% guaranteed from USA. Oh, they just matured. Painful. So at the end of the day, everyone seems to think interest rates have to go up. Hell, we've been saying that for freaking since 2009. It just hasn't happened. Hasn't happened. Does that mean it won't happen? No. What's the odds of that happen? I don't think very high. I just don't. Yeah, if we knew interest rates are going up, we could make millions trading futures, or yeah, absolutely, or actually big time short in the market. Because remember, as interest rates go up, as I did the video today, why I'm not worried about high PE rates. Don't fight the Fed. As interest rates go up, that simply means risk assets become less intelligent, and they lose their value, and people would sell because they can say, I can get tax-free or safe money at a better rate than I could before. That means this is on top of that makes the risk assets not quite as valuable, and they'll start selling. So if you knew the interest rates going up, shorting the market would be smart for sure. All right, well, I guess I'm done here, man. That's good stuff. Thanks for y'all being here. I'm actually kind of tired of it. Let's take one look. I'm a gander. Oof. 30 to 24. Well, okay. What the heck? The Pack's got the ball. 8 minutes left at their own 35. Well, they're not out of this yet, everybody. They're not out of this yet at all. So don't forget, if you are a subscriber on my Subscribe Star, we have, I'll be doing my live stream on Wednesday. All right, so subscribe. So if you go to subscribestar.com/Josh Scanlon, and you become a Subscribe Star patron, I guess what you call it, the $10 a month, we do separate live streams. You can even call in. Actually, I think it's pretty cool. So Subscribe Star members get that $10 a month, and we do that twice a month. So my Subscribe Star folks will be able to ask questions on Subscribe Star. It's just $10 a month, man. That's it. So if you want to try it, and a couple months later you say, that guy Josh, I knew he's going to vote for Bernie Sanders and he can't stand me. You can always unsubscribe and you don't get your money back, but you don't have to keep paying me $10 a month. I'm not voting for Bernie Sanders, trust me. To be perfectly honest, in case anyone's wondered, I like the Trumpster, big fan of Trumpster, not a big fan of the Republican Party as a whole, but I like it better than I like the Democrats. So just to let you know, hate me for all it's worth. I don't care. It's fine. But I think it's fair to be honest with you, man. I like people honest with me. I follow a lot of guys who are on the left that I enjoy listening to. I like their arguments. My man Styx Hexhammer, he's a big atheist. I like his arguments. I don't agree with it, but it's interesting. He's got good thought process. A couple of the guys on the left I like. Hell, I even like AOC to some regard. I think she's crazy in terms of, I don't think she has her head screwed on straight in terms of the Green New Deal, but I like the fact she's taking on the craziness of the Democratic Party. I like it. Good on her. But at the end of the day, she'll never win because the Democrats are corporatists, as most Republicans are too. We got to admit, it's the one big party, and we ain't invited. All right, so I'm out of here. We'll see you guys on Wednesday or next week. Lots of videos, lots of spreadsheet videos coming down the pike. I'm getting the book cover on my Roth, my ultimate guide to Roth conversions. The book cover is being done as we speak. That should be out. The book cover, which will finish up my kick in the pants to finish up that book. And I'm going to do a class on that, a course on that as well. So I have a book and a course, and I'll probably offer the book as part of the course. And if you don't want the course, you can have the book for whatever I charge on Amazon. That should be out. I told my wife my goal is by the end of February to have that done. So I guess that's it. We'll see you guys. Blessings. See you now.